Morning. How we doing? Sorry I'm late. Excuse me. Running a bit behind this morning. Been engrossed in other stuff. How's everybody doing? All good? Trying a quick DAX short gap fill this morning. Where's my pen? Pen's gone. There we go. So looking for gap fill out the open. Have got stops placed on these positions. Got chopped around this morning, basically pushed up, and we basically pulled back down and retested. So I got in on the retest, but we haven't gone anywhere. So I'm not sure about this morning, but anyway, we'll see. Looking at the daily on the DAX, we've got obviously yesterday we didn't just come down and test this area, we completely smashed it. It's just fallen out of bed. We haven't had an update for absolutely ages. We've got this whacking great gap, which I think we're going to go for. But I'm going for the short gap fill first this morning. I've basically been getting it wrong really badly over the last couple of days. Oh, by the way, the account's blown. I said yesterday anyway, didn't I? But I went for it yesterday on the 100k evaluation because I got annoyed by flip-flopping constantly on the profit target. So I just went for it yesterday and I picked the wrong direction. So anyway, that's gone. Start another one. I'd also hemorrhaged $1,800 on the funded account yesterday. So I'm taking a break at the moment from Indices until I can figure out what the hell this is. This is either the biggest market collapse we've seen since the 1930s, 1920s, or this is going to do what I'm expecting it to do, but it's not doing what I'm expecting it to do. So I'm sitting out at the minute. I think we're going to pull back, and then I think we're going to collapse. I wasn't expecting to break these lows. I was expecting to pull back before we broke these lows. And obviously today is FOMC day. So it's the big one today. We've got retail sales pre-market, and then we've got FOMC fund rate. Expected potentially, there's a lot of talk about this going up to 175 instead of 150. If that happens, we're going to get some blood in the water today. We're going to get a big move. So all indices potentially have got the possibility of quite a substantial day. You know, I'm talking a big day today, and a big day down, and off the back of this multi-day collapse that we're witnessing at the moment. So very, very difficult for the indices at the minute. Very difficult to trade the indices. Unless you're hitting the short button, like I said yesterday, the Telegram channel. Basically, the strategy for indices at the moment is just keep hitting the sell button until you're a millionaire, and that's literally what is happening at the moment. It is just falling out of bed at a rate of knots. All indices doing exactly the same thing. So not quite sure what to do today. So taking a day on the sidelines. This is a demo account. I'm just mucking about with today. Just to keep my eye in, basically, but yeah, not trading live at present. I'm going to look at position trading, getting back into more position trading as of next week. Scalping's just killing me. It's just absolutely draining me at the moment. So I just want to get back to some more position trading. So I'm looking at trend. I'm trying to keep the trend position trading strategy. Oops, sorry, one sec. This one's just normal alerts. I was just looking at the ADRs. It's only EuroCAD. So yeah, so from a position trading perspective, there's a lot of stuff which is bearish at the moment. Euro, pound, pretty much everything is bearish at the moment, and I'm waiting to see what happens today with the US dollar. Once we've got FOMC out the way and we've got the rate announcement out the way for the pound as well, and the yen monetary policy statement on Friday, all the main news as to what the banks are potentially thinking of doing is gone. So I think from from next week we'll have a much better idea of stability in the FX market and where things are going to be going. So I'm going to look at sort of trend trading positions on mainly euro and pound, I think mostly, and CAD, because we know CAD's going to be strong. We know euro and pound are on their knees. The US dollar at the moment and the yen are the two real question marks as to where these things are going. We keep getting hints that we're going to get a pump from these guys, and it doesn't seem to be happening. So very, very tricky to know what to do with them, but I think we'll have clarity by the end of this week. So I've decided to take the rest of this week off and just I'll do analysis, but I'm just not going to trade this week. Just going to work on tweaking the market reversal alert EA so that I've got a version that's going to be able to trend trade better. Basically, we've got the mean reversion trend trading strategy. So that's the one I'm going to basically be employing. So these sales aren't going well. So bear with me one sec. Morning, Alan. Sort of feeling better. I can't get rid of this cough. Just cannot get rid of this cough at all at the moment. Excuse me, there it goes on cue. Morning, Stevie. Yeah, I just basically, this COVID hangover cough just will not go. And as you can probably tell by my voice, it's just croaking me out. So, yeah, basically, can't get rid of the bloody thing. But anyway. Right. So, yeah, DAX obviously this morning, one or two things is going to play out. They're either going to do that gap fill or they're going to run for the higher gap, which we've got. I haven't got a clue where it's going, so I'm not bothering today. Just not bothering with the indices anymore this week. Going to leave it. Morning, Diamond. So take your pick. It's either going long or it's going short. You've got 50-50 chance of getting it right. There you go. There's my advice today, because I can't get the indices right at the moment, so I'm not going to bother trying. So yeah, obviously all indices yesterday made new lows substantially, broke down, held, they're all collapsing, falling out of bed, the world is on fire, and yeah, it's either going to collapse even more or it's not. But at the moment, if you look historically, just go back on your charts and look at the amount of times we continue down further from where we are now. Doesn't happen. If it does happen, there's something majorly wrong in the markets, isn't there? If we're going to get sort of 7 down days of that size on the trot, something is very wrong. So I don't really want to be involved in particularly trying to long it, although I have a firm conviction that will happen because historically it always happens. But you know, again, don't want to be getting in front of a freight train, do you? So it's a very, very difficult situation at the moment with these indices. I'd rather wait for this thing to get back up to here, if it takes a week or so to get back up to there and then get back on the bus, than try and pick the bottom of this thing, because it's just not wanting to have a bottom at the moment, is it? We looked like yesterday we were going red to green on the DAX, and then it went, nah, actually not, boom, and collapsed again. So, yeah, horrible at the minute. Bitcoin, crypto market is officially dead. Everything's officially dead. It's literally, if you hold any stock whatsoever, get rid of it immediately. We're going to zero. That's what it feels like at the moment. The world is just melting. The financial markets are melting. It's very hard to know where you're going to pick a bottom in any of this. I was saying in the Telegram group, there's a guy that bought Bitcoin. He's a YouTuber, does a few trading videos. I don't think he really trades for a living. He just kind of buys Bitcoin every now and again and gets lucky. but he bought it, made $1 million, lost $500,000, got it back, lost $500,000 again, just took out a bank loan to buy some more. And that video I think came out around there. So that guy's obviously in massive problems now. Yeah, why aren't we coming back here? No one can give me any answer. If Bitcoin can get back to there, the markets can get back to there as well. People have been calling this level. I've had this level on my charts since this crash started. That's what people are calling for. Looks like we're getting there, doesn't it? When we got to there and we broke that low and then we pushed back up against it, everyone was like, nah, it's not going to happen. Boom, boom. So yeah, short button, everybody. Hit the short button. Oh, I just hit buy by accident then. Close. Right, so I'm going to give it this week. I'm just going to work on strategy this week for next week. And then plan to get back to position trading on my own account next week. I've still got the funded account which I've been trading the indices on, which I shall continue to do that. So I will continue to do some scalping on the DAX and Nasdaq, but I just don't want to trade like that constantly. It drives me up the wall. So going back to FX. So far today, Euro CAD, we've got an ADR hit to the upside. So Euro yesterday, if we just whiz out to the hourly, Euro yesterday had a really good day. Bit of a pullback and then a push back up again, but a lot of the Euro pairs yesterday had a very, very nice strong push. And so far this morning, they look like they're holding up pretty well as well. So we've got some good strength coming into the euro ahead of FOMC. Obviously, as I said on Monday, FOMC week is always very difficult. It's either an accumulation or it's a reach. And if we get a reach ahead of FOMC like we're getting here, quite often FOMC undoes that. So everything that we see this week, this evening, there's a high probability of it unwinding itself. That's the norm anyway. Obviously at the moment, the norm is very, very different looking, isn't it? So I would suspect, looking at all these euros where we're reaching for these levels, that we will probably hover around these levels today and then potentially get that massive drop off when FOMC happens. Obviously euro we are short on, CAD we are long on based off of oil, so expectation is for this to come down. The fact that we've got a 2-day reach and we've taken out all the recent liquidity up at the highs, I would suspect we are looking for a reversal today. So it's worth, if you want to, obviously using stops in case FOMC goes the other way and it all goes wrong this evening. It's worth trying to start building some short positions on these, because if it goes as expected, you're going to have a very, very high risk reward. So this afternoon, have a look at where these euros are, especially this Euro CAD because it's already done ADR today. Have a look at where these euros are for potential short opportunities. They've been reaching incredibly high, and obviously euro US dollar down there, nice W reversal. Expecting US dollar to potentially power up off of FOMC and the markets to come down further, so continuation drop on that, but obviously it's reaching up at the moment, so start building short positions, assuming that we are going to get that strength off the US dollar, but we don't know, so we will see what happens. But Euro CAD already hit ADR. We're running up into this level of support resistance again, which we've hit and we've rejected. So if we get a nice sort of accumulation here or a gradual drop starting, looking like a good looking short to me on the Euro CAD. Got quite a few weeklies hit as well. So again, US dollar CAD, massive extension to the upside. This thing's been like an absolute rocket. it's difficult to take a short on the US dollar at the minute, ahead of FOMC. But I mean, this thing's massively extended, obviously, as you can see on the hourly. But we've hit our weekly range already. So weekly range started there. We've done it basically by Wednesday morning. So potentially, if we see an accumulation, this could be ready for a drop. I'd be looking for US dollar strength this afternoon, or this evening. So not quite sure what to do with that one really. But pound US dollar, again, been driven down massively against the US dollar. Hit its 150% of its weekly range already. Massively extended on the 4 hour, massively extended on the hourly. But you know, US dollar strength I would anticipate a drop. So if this thing pushes up today, comes back up into that resistance, good looking opportunity for shorts. And of course, this is all assuming that we get strength off the US dollar, i.e. the rate increases, and we get that, you know, people piling into the US. But we don't know what's going to happen. So very, very, very difficult to tell. We've got the pound yen and the pound CAD also extended. Massive yen strength this week so far. That's been pushing down very, very nicely. Nice symmetrical triangle break there. So yen, obviously, we've had that power coming in on the yen. It seems to be sustained at the moment. But again, FOMC is going to change all of that. There's a high probability that the outlook on the yen at the moment will change when the Fed does its rate announcement, and depending on what is said in the press conference. And then on Friday we've got obviously the Kuroda talking. So there's potential there for him to switch sentiment on the yen as well. So I get the feeling we're shifting back to yen strength again. The US dollar yen we looked at, that 135 level, we got the bounce perfectly off that 135. We only pulled back though and made a new higher low rather. And then we've come back up and retested it again and rejected it again. So they've just taken the liquidity there. Everything I'm seeing at the moment is indicative of a weakness in the US dollar coming. All the technicals and market structure that we're seeing is kind of reaching for areas where they would reverse off of it, which is the opposite of what I'm expecting to happen. So it's very, very difficult. I've got very mixed feelings about it at the moment. I want to be shorting the US dollar from a technical perspective, but from a fundamental perspective, I want to be longing it. So complete indecision at the minute. But after this evening, hopefully that'll all become clear. So yeah, really, really good liquidity run there on the US dollar yen. We've broken back down below this low, so nice market structure break. If we can push up there and pull back down again, good chance of this coming down. It's going to take some fairly strong yen strength, obviously, but this has got so much to undo. It's going to pull back at some point, but we're going to need a weak US dollar. So be really interesting to see what happens off of FOMC this evening. Euro pound massively extended. Pound is incredibly weak at the moment. Euro has had a really good couple of days and it's taken full advantage of that, yesterday being the main day. I mean, the move yesterday on this thing, 163 pips off of a 76 ADR. You know, well over 200 ADR move yesterday. There's quite a few things off the charts yesterday. Obviously reaching for levels, which again just makes me think, you know, these are all teed up, ready for potential reversals, or is the market getting ready for a continuation move? Normally, we'd be looking for reversals on all of these, pullbacks off of the FOMC news, but who knows? So again, taking out liquidity at the highs this morning. Holding up there at the moment. If it breaks back down below there though, they've got the liquidity they need to do that drop back down to the downside. So again, massive extension there, and Aussie dollar against the US. Aussie's not been very well. Aussie's been very, very, very weak. Again, nice reversal alert there. Looking technically like a long, fundamentally probably a short based on FOMC. So again, it's just a real mixed bag out there at the moment. It's very, very difficult. Normally with things like this, where you're that extended on the 4 hour, I'd be jumping all over this, especially down at a support level like this. If you get in here and you're wrong, you're going to get a bounce at support, which is going to get you out. Yeah, very hard. So, morning Neo. Jacob, EuroCAD. You've already covered EuroCAD. Maybe you missed it. So, shorts. Again, this is one of those expanding wedges. Very difficult to trade. Unlikely, isn't it? But you'd have said that there as well. You know, this is the euro we're talking about. Euro doesn't beat Canadian dollar when Canadian dollar is running off on oil riches. Why is it going up? You know, the market's just illogical, totally illogical at the minute. Really is. But I'm going to be sticking in line with daily trends. If the daily trend is saying this thing is a short, this thing is a short. So I'm going to be looking for short opportunities on it. Excuse me. So yeah, ADR hit today already, 125 ADR, and it's tapped into this level of resistance. This is an old level of resistance. And rejected. So good looking short. Right. So RSI extensions. We've got a few of these, mainly euros. So this euro's off the charts at the minute. So Euro Swiss, big strong push up. These have only just hit RSI extensions though, nothing really extended on the hourly, so no sustained moves. But again, Euro Swiss, if you look at this on the 4 hour, this has been an absolute short haven for ages. Then the war kicked in, and as you can see, when you know everything we had was nice and orderly, everything was going to plan absolutely perfectly, then the war kicked in and everything just went nuts. It's like the euro started powering. Why is the euro powering up when there's a war on its doorstep, which is likely to overflow into its area? Its economy's shot, interest rates are going through the roof, everything's becoming expensive. Why? There's just no logic to this. But at the moment, market structure is saying we're going to make a new high back up to here. So I can't see why. Honestly, can't see why. We got the Swiss franc, we've got the SNB rate announcement on Thursday, tomorrow. This is going to be as expected. The SNB have already come out and said, yeah, we're definitely doing 0.75. The SNB don't muck about. They don't. They do what they say, and it's always the same. So that's going to be as expected. So there's nothing on the Swiss franc that will be shifting this. So, you know, I'm still bearish on the euro, even though we are temporarily pushing up. If you look at this, you could have taken basically really any trade you wanted on RSI, and you would have made a profit. Yeah. So you can use RSI on this and just still keep trading it when it gets extended, regardless of which direction it's going. I would still have a much more short bias on it than a long bias. But you know, the Swiss franc has lost all its power, hasn't it? We've seen this. As soon as this happened, the Swissy all of a sudden stopped having its normal daily transactions, and the euro just ran wild on it. So I'm still short it. Even though we're back above the 72 and 24, but if you look at it, we're really not moving anywhere, are we? We're actually sideways on these MAs. So this is just flatlined at the moment, and we're kind of establishing a range. So I think what we're going to do is just sort of roll over gradually on this one. So we're looking for shorts more than longs, hence that one there. You know, it's nicely extended to the upside at the moment. Obviously, everything's going to go crazy off of FOMC later. Well, it should do. I mean, we might get one of those dead FOMCs. You know, we say this, we build up to this, because FOMC normally is an absolutely cracking news event, and then we sit there and go, boom, that's it. But I think this evening's one, because of obviously this potential, is going to be fairly volatile, because a lot of people are anticipating this 1.75 today. And if that happens, we should get some seriously good movement, but we'll see. So Euro Swiss is extended, Euro Pound is also massively extended. So looking at the pound pairs, obviously all the pound pairs are downtrodden, hugely downtrodden at the moment. I mean, even the yen, which has been the weakest thing in the world, I mean, look at what the pound did. When the yen had that little bit of strength, the pound collapsed. You know, it just has got nothing at the moment. We're in big trouble in the UK. So looking at Euro Pound, obviously the Euro is taking full advantage of that. Any slight strength in the Euro, and we have seen that starting to trickle in. The rate announcements are getting more firmer and firmer for September, October, July. You know, it's all like, yeah, we're definitely doing the rates, which will boost the Euro. It will give the Euro that little bit more strength, but it's going from being an absolute turd to potentially, yeah, well, hopefully they might be able to pull themselves out of it. So for me, the Euro is going from being massively negative for the last few years to kind of a neutral currency where, yeah, okay, it's got a bit of strength, but other currencies are going to push this around still. So the fact that we're this extended, I'm looking at the 4 hour here, but on the hourly, massively extended, 4 hourly, we're way off the charts on the 4 hourly. I think we're due definitely some kind of pullback. The problem is the pound is unlikely to be the thing that causes it, so we're going to need some Euro weakness. So tricky one this. It's a weak currency against a weak currency, therefore you tend to get accumulation, which we've had. The Euro's just suddenly come to life over the last week. It will drop back down again, but the main thing that's going to do that is going to be the rates on Thursday. Expected to come out as positive. That should push the pound up. Where am I based? In the UK. Alan. This looks like a really nice short opportunity. We'll have a look at this on 4 hour in a minute, obviously. When I look at the 4 hour size, but we're just taking that liquidity there. We had literally 3 candles, 12 hours straight up. We took out this high. We didn't just take this high out. We just didn't even bother about any of these highs. We just went for it. So pull back into this area or potentially into this area when it does. And the rate announcement on Thursday is likely to be the catalyst for that, if we don't get anything off of FOMC, obviously. So we'll see. So Euro Pound massively extended, and Euro New Zealand as well. Euro New Zealand, New Zealand dollars, as you can see, been very neutral, neutral to weak, along with the Aussie recently. So we've got a nice big push. This is literally all this Euro strength coming in ahead of FOMC. So we've got options expiries on Friday as well. It's what they call a triple witching. Lots of expiries going on. So I think we've got some decent possibilities of some big unravelling towards the end of this week. So nicely extended. If this continues further and gets better extensions here, that's fantastic. We're already extended on the 4 hour. Again, any kind of extension up into the sort of 80s and 90s, you're going to get at least a pullback. We're also double topping right now. Euro New Zealand is looking nice right now. M5 reversal alert, in for a short on that. Yeah, really nice level on the 4 hour there. Failing that, we haven't got any real resistance. We've got potential resistance there. So you're free basically. About 1.5 ADR move to the upside. So if this resistance is, if you try this and this doesn't work, maybe a couple of positions up to there and up to there before you get the pullback. If you get anywhere near there without getting an exit, I mean, this thing's going to be off in silly collapse levels, isn't it? It's just not gonna get there. So yeah, good looking levels on Euro New Zealand, but that's obviously on the hourly. So looking good for short opportunities there. 4 hourly, we've got quite a few extensions here. Aussie dollar, US dollar. Again, we got this support level down here. If the US dollar powers up this afternoon on FOMC, weekly range has just been hit on the Euro New Zealand as well. It's likely to just slam through this level. So looking at where we're going off the back of that, you've got to be coming out to the daily very hard. We're getting back down to where were we before COVID? Back down to these sorts of levels again. So hard to pick a bounce point if we break this level. It's likely just to pull back and continue. And again, that is assuming that we get that US dollar strength coming through. So although this is a nice reversal here, potentially if we can get some strength off the US dollar and get a push back down into ADR on FOMC, that's where I'd like to see it. I'm not quite sure what's going to happen on FOMC this evening. I'm not sure whether we're going to get a power up and sustained move, or or a weakness and sustained weakness, or whether we're just going to get a move and a fade. I'm really not sure what's going to happen this evening, but fundamentally we should be looking for strength on the US, I think. So if we can get back down into those levels, that's where I'd really like to start building along. Because at the moment, again, you're standing in front of a steam train, aren't you? That's only just extended as well, so it's not something I'm really interested in. I like to get 75, 80 plus, so something like the US dollar CAD. Euro pound obviously is extended. We've looked at that one. Still going, still off to the moon. The longer that keeps going, the better. But we've got no strength whatsoever in the pound at the moment. Euro US dollar, same thing as all the others. Much rather be looking for bounces down there, but where we are at the moment, shorts. But anywhere really in this zone, shorting from a position perspective. But I will start getting into some positions next week when everything's calmed down. Pound Swiss, lovely levels on the pound Swiss, but again, this Swissy, you can see obviously the Swissy, it's struggling at the minute. We're not getting that strength. We had a little bit of an inkling last week before. We had a few Swiss franc power ups, and it looked like the Swissy was returning to normal, but it hasn't done an awful lot since. This is a real strong level for the pound Swiss that we're not interested in going below. We haven't been interested recently. This is the fourth attempt to get through this level. We are making new lows, so we're coming down on top of this. Whether or not it's got enough strength to withstand again and do a little bit of a pullback, who knows? But when it cracks that level, it's going to go. With the weakness in the pound at the minute, I don't hold out too much hope for this level. So although this is nicely extended down here, if you look at the bounces we've had recently, we get a bit of a bounce, and then you get another little bit of a bounce, another little bit of a bounce. That one obviously went properly, but this thing got extended here, collapsed again, and you look at this, sellers have been trying to get through here, and the buyers have been buying back. It's been failing, but it hasn't made any legway whatsoever. Every time it's pushed up, the wicks to the upside are pushing this thing down hard. There's a lot of selling pressure on the pound at the moment. Nobody's interested in the pound. So I get the feeling this is going to come down. It needs really the Swiss franc to power up. Likelihood is we're going to see this tomorrow. So we've got the Swissy at 8:30, and then we've got the pound at midday. Pound rate, I have to say, I think we're probably going to see some strength in the pound off the back of it. I don't think it's going to be sustained. Doesn't matter what you do with interest rates to try and battle inflation, we're stuffed. So at the minute, I don't think we're going to get any change here either. There might be some that are saying to hold off, but I doubt it. So if the Swissy comes out as expected, we'll probably see some Swiss franc strength. So from the pound Swiss's perspective, what we'll likely see is a push down, and then when the pound rate comes out, we'll probably see a pullback. Everyone will then go, oh, it's another rejection of those lows, and everyone will start piling in their longs. Stops will be put under there, and I think they'll just come down and just drive straight through the bottom of this. So again, after everything this week, bias would be short on it. If we can get a pullback up into here, that's kind of where I think you probably want to take it from. But taking a long down here is risky. You'll probably get a pullback, but whether or not the Swiss franc kills you first before the pound brings it back, don't know. So much news this week. Today and tomorrow is just solid, and Friday is just solid. Solid manipulation ahead. So pound Swiss, euro, US dollar. We've already covered this one. Extended on 4 hours, just about to turn off because we are now pushed up. So I ignore that one, but you know my feelings on that one. Short. Pound US dollar, same thing. Short. We're at a lovely level down here. Are we? I haven't got this level drawn. Oh yeah. Daily support for a bounce and then a continuation down. So again, all going to be reliant on the news and what's going to happen on the news. We've got FOMC first, then we've got the pound, and then a drop. So yeah, so difficult, very difficult to long from down here at the moment. Lovely 3-bar reversal. Well, it wasn't lovely, but I mean it was the start of a reversal going in, and we've got a little bit of strength, but likelihood is we're not going to get anywhere today, and then obviously FOMC is going to kick in. So if we get the opposite on FOMC, and FOMC massively weakens the US dollar, and we get that spike on the indices, we know where the indices are going, don't we? That's obvious. Yeah. So when we get back up into here on the indices, start flipping the other way on the US dollar. Aussie dollar, New Zealand dollars just hit ADR. Have a look at that. Aussie New Zealand. Quite sure why Aussie New Zealand's an ADR hit. Bit weird for that to be pushing quite as hard in the London session, but obviously we've got a fairly strong Aussie overnight. So anyway, so yeah, pounds US dollar. Very difficult call again ahead of FOMC. So. Very, very nicely extended to the downside. Ordinarily be looking for longs on it. At the moment, with the state of the pound, I want to be taking RSIs up at the highs short. So if we get that push up, i.e. For some reason FOMC massively weakens the US dollar, then indices will come up. When indices have filled those gaps, I'll be looking for short opportunities. So it depends where it gets to, if it gets anywhere. But visualize where we're going in FOMC. In a normal FOMC or non-farm payroll or rate announcement where we get something unexpected happening, we'll get a 200 to 300% ADR move. Yeah. So a couple of 100% ADR is going to bring you back up into this accumulation. 300% ADR is going to bring you back up into resistance. That's where I want to be getting on board, ideally. New Zealand dollar, US dollar, same thing. It's all the same. All these massive extensions. We've had really strong US dollar. Everything else is being battered into the floor. Ahead of FOMC, it's a real risk taking this. If it plays out and we get a weak US dollar, you're going to make a fortune. If it doesn't, you're either going to get stopped out, you're going to go into big drawdown. So either way, probably better to wait until FOMC's happened, get a gauge on where the market is probably going to go, and then start entering to positions from there. US dollar CAD, completely the opposite. As I say, everything is in the opposite of what I'm expecting to happen. So I want to be taking longs on the US dollar. Do I want to be taking longs after it's that far extended on the 4 hour? Not really. Which is why I'm so conflicted at the moment, because the technicals are telling me you want to be short in this, the fundamentals are telling me you want to be long in it. So I don't really know. I'm going to wait for it to happen and then I can make a decision after that. But US dollar CAD, obviously, the Canadian dollar is still got strength behind it at the moment. US dollar is obviously beating it down. It's having a weak spell at the moment, the CAD. So looking really for Canadian dollar to strengthen up and continue to sort of send this up and down. Strong currency against a strong currency is a range. And we've got two very strong currencies at the moment. So again, looking at RSI extensions, you should be pretty safe taking any RSI extension. You'll get it undone at some point. One of them will pause, the other one will strengthen, and we'll get that normal range. Where we are at the moment, obviously, we would want the CAD to strengthen up and US dollar to have a bad reaction to FOMC. So if you think that's going to happen, 150 ADR would be a second entry. So yeah, so that's it. Confusion. Total confusion in the markets at the minute. Just, this is where we were looking for our longs on the US dollar Swiss. Was not expecting it to go anywhere near there. It's filled every gap we've got. Wasn't expecting it to be that strong, that fast. I was expecting it to get there, but I wasn't expecting it to do it in a week and a bit. I was expecting it to do it in a month. So, or longer. It's just a, continuation grind. If you look at this on the, normal trading conditions, yeah. We're just in such an abnormal time at the moment. This chart kind of says it all with what's happened with Ukraine and with the economic fallout of COVID. The markets are in utter turmoil at the moment, and the volatility is just unbelievable. If you're caught the wrong side of one of these in a position, you're going to be in trouble. So I think at the moment you've really just got to pay attention to the weekly MAs and just stay in line with whatever the weekly MAs are telling you, regardless of what your fundamental bias is. If you think something should be the other way, you kind of need to go with what the market is telling you at the moment. Euro, New Zealand long, totally against the grain of what I believe in the euro and what we've seen with the New Zealand. The Aussie and the New Zealand powered up massively off of mining and its core exports. When the Ukraine crisis hit, Aussie and New Zealand, we bought into those dramatically, didn't we? At the moment, the euro is the last thing I would want to be longing against something like that, but that's what the market's telling you to do at the minute. So it's very, very difficult to pick a fundamental direction. But got to jump back on the horse at some point. So I think support resistance areas obviously always are key. And RSI extensions still. So plan is pull back long, because that's what it's telling us. So counter trend on this one. But ideally, Want to be looking for RSI extensions to the downside for longs. Who'd have thunk it? Long euro. Anyway. So that's where we are at the moment. It's a very, very, very mixed, tricky bag at the minute. Everything is really, really extended, and going into an FOMC release when everything is this extended is very, very hard. Every core of my being is saying you need to fade all of these big, strong pushes, but just got to be a little careful. So it all depends really on how you're going to be trading. So if you're going to be trading with stop losses, or you're taking maybe a couple of positions and a hard stop in there if they don't work out, these are all beautiful fades at the moment. This has gone solid up like that. It has not had one profit take move. Yeah, everybody that's long on this is going to get out of this at some point. When they do, it's going to be Armageddon. It's going to come down very fast and very hard. If they choose to do that in FOMC, you've got a massive profit on your hands and a very, 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 very small risk. Plays on all of these for the shorts have got way more potential than the upside. So, but that's fundamentally against what is expected to happen. So hard, isn't it? Very difficult choice at the moment. A lot of money to be made, but not from a position perspective. Anybody got any other pairs they want to look at? So on the way to the gap fill at the moment. Looking good. So I wasn't concentrating on the DAX at all. So opening range breakout to the low. We just retested the opening range and nice bearish engulfing going in. Still got 2 minutes left on this candle. But obviously market structure at the moment, potentially that's a nice bearish pullback down to the gap. But it's also a rejection of the market open. So. But looking good so far. Anybody got any other pairs? What's everybody's thoughts on FOMC? What's everybody doing for FOMC later? Personally, I'm just watching this one, preparing. I'm going to be working all day today on analysis. I'm just going to spend a load of time in the simulator with the EA and just fine-tuning basically what I want to do moving forward next week. Hopefully my voice clears up. I'm very bored of having a froggy throat. Eurocad's pulling down off of 125, so which is taken out of that high. Just watching Diamond, yeah, good plan. I think that's the way forward this evening. It's really difficult because I think there's a lot of money to be made today. You look at stuff like this and you just think, if they do devalue that US dollar today, and people start to see that coming down after the strength it's had, everybody in there is going to jump ship at the same time. And this thing's going to come down so hard, but being FOMC, there's that high probability of getting one of those. And then you want to be jumping on board. So it's kind of pending order. Wait for FOMC to happen. If this drops in FOMC, pending orders above the high, you want to be on board when that thing goes. And if it doesn't get triggered, and it does just do that, so be it. But I just really like it short at the minute, really do. but fundamentally it's totally against what I'm expecting. Same with the pound US, and the euro US. Equally, some kind of massive 100 ADR, 200 ADR move, and then pending orders under there, clear the decks and go. But who knows? It's a tricky one today. Also, a lot of money to be lost today, which is the rub. Yeah, it's a very hard one. The problem we've got as well is it's not so much the fact that we've got the news, it's the concentration of the news. It's literally, we've got 3 days, and last week we had the euro and other things going on, but we've got retail sales, which is a reactionary indicator to monetary policy. The Fed's watching this to see what people are doing from spending perspective. Then we've got FOMC and the announcement. They'll be dropping hints as to the next one. So not only will the market be reacting to whether or not we get this, they'll be planning for whatever comes out in the press conference as to clues. So they'll be dropping clues as to what they're going to be doing in the next rate announcement. So we get the initial reaction to that, and then we get, okay, right, this is what we're going to do for the next quarter or the next month. And then you get even more volatility coming in. Aussie tomorrow, but then we got the SNB, which isn't, the market will be reacting to, but not specifically. But then we've got the big one on the pound, and then we've got the Bank of Japan on Friday. So 3 biggest currencies all dropping in 3 days. This week is just this is the deciding point. Can make a lot, lose a lot, but I'd rather see what they do with it and then make my decisions next week. Oh, hello, Dax. Okay, gap fills on the way. I haven't got the crickets on today. I was just thinking, it's really quiet. Completely forgot. It's because I wasn't trading this morning. Dead at the minute. Wasn't dead when that happened, I wouldn't imagine. Andy, good morning, Lee. FOMC Powell out saying he wants a soft landing. So you're going with a 50 basis point hike today rather than 75. Yeah. I know he wants a soft landing. I can never believe anything they say. They're also saying there's not going to be a recession. Tell that to the markets. There's not going to be a recession. Whoops, wrong one. I don't know. Difficult. The thing that is like the people that have said they're calling for a 1.75 instead of a 0.5 are people like Goldman Sachs, and some of the big investment banks and that big analysts, and you kind of have to take it with a pinch of salt. If you look at it from a data perspective, facts, statistics, the Fed is very good at not doing unexpected increases. So, you know, you have to say, right, 1.5 is what they've said. There's a very high probability of that. We've got one time back in 2008 where they actually decided, no, we're going to go a little bit different, and then back in 2007. Other than that, the Fed is spot on. So I kind of think, yeah, 1.5, that's what they've been calling, that's what they've been saying, so I think we'll get that. But you never know. You never know. George, do you have any group I can join? Yeah, Telegram. There's a link in the description of the video you're watching to the Telegram group. There'll be a link coming up at the end of the video, at the end of the session as well, the link to Telegram. So just got a little bit of buying pulling up off the lows at the moment. The volume's very low on that. So solid market structure to the downside, wherever you want to call the market structure from the open. So we should get the gap fill. Hopefully. Yesterday, I switched over yesterday to M15 for scalping. Say I switched over to M15 for scalping is kind of a bit of an anomaly because M15 is not a scalping time frame. But I switched over to M15 to get a sort of different perspective on the market. When it's not until you take a step back and realise that you've been getting in too fast and too hard, which I've done a couple of times, which is why I couldn't blew that challenge. Was the big loss days that I had. When I look at the loss days that I had, were in too fast, in too hard, because I was just trying to get through the evaluation and get onto stage 2. And stage 2 is kind of, right, relax, just got to do $4,000, very easy. You know, $500 a day, can't not make $500 a day scalping. It's very difficult, but we can. But it's easy to make $500 a day off of a couple of trades. But I was getting in way too fast. When I looked back at all the trading days I had bad, I went over to M15 and analysed those trading days on M15. And you just see some of the entries, you're like getting in there, getting in there, getting in there with a short, and then it's popping up to there, stopping you out and coming back down to there. And you know, all this whipsaw you see on M5, you know, that sort of thing here. Let's look. So looking at where the market opens and where the bell went, you don't see it. Yeah, what you'd have seen looking at that is a rejection of those highs, and then a second rejection of those highs, and then a bearish engulfing. There's your entry. Pre-market. There's only one entry pre-market. M5, you drop down. There's an entry there. There's a stop out. It's coming back down again. There's a second entry. There's a load of drawdown. Right, I'm going to add into it there. Back into drawdown again. You know, you see a symmetrical triangle break on M5. On M15, you just literally see one bearish engulfing signal. So I looked at M15 yesterday, and it just makes it so much clearer. But that's not scalping, is it? And that's when I came to the conclusion yesterday. This is why I gave up scalping, because it drives you up the wall. You get these really good days and weeks, and you make loads and loads and loads of money. I mean, I made over 15 grand last month. But I worked good 6 to 8 hours a day every day. I was in here doing 2 sessions a day, wasn't I? At points. So it's just not fun. It's not me. Hasn't been me for many, many years. So, but I will still keep doing some scalping because I know people love it. So pulling back here, good short opportunity in this propulsion gap. Stevie, short CAD yen and US yen from 135. Yeah. Oh, look at that rejection at 135 on the daily. It's just demo account. There's no point in trading it. Yeah, looks good, doesn't it? It's really good. Rejection. That 135 level we've been waiting for ages. That's a lovely swing, but it's completely counter to what I'm expecting FOMC to do. This is the problem I have. It's like, oh, we'll be waiting to get there. Hang on a minute, it's FOMC. The interest rates are going to be going up. It should bolster the US dollar. Do I want to be shorting the US dollar against the yen, which is historically at the moment the weakest currency in existence? Do I really want to be taking a short on what I'm expecting to power up against the weakest currency out there? Your whole brain is saying that's a ridiculously stupid thing to do. But if Kuroda comes out on Friday and says, right, this is what we're doing with the yen, highly likely that's going to happen, isn't it? It's a good short, but I would be trading this with a stop. Using a hybrid position trading strategy, I think, is probably the way forward at the minute, which is what I'm backtesting and analysing at the moment. Which is what I started to do again after the war. Get in with a position here. We've got that rejection off of 135. I'm not using hard stops. See what happens. If we push up and reject again, fine. I'm not going to get stopped out. I'm still in this trade. If it pushes up to sort of 136 and a half, I'll take a second shot. But if we get up to 137, I'm out. Yeah, I think that's the best sort of strategy at the moment. I still don't think using hard stops is going to help anybody. But a kind of hybrid where I don't want to get caught on the wrong side of, and this is what I'm avoiding at the moment when the Ukraine crisis kicked off, you don't want to get caught on the wrong side of one of those in position trade. You need to have an exit. And the problem is we're getting multiple squeezes at the same time. Times of crisis, if you get multiple squeezed on 2 to 3 currencies at the same time, that's it, you're out. And that's what started to happen with Ukraine, which is why I stopped the position trading side of the trading. I think now we should see a little bit of normalization return, but I'm still not convinced we're going to get runaway currencies. Main reason being is we've got so many weak economies. The pound especially. The pound, we've been bullish on the pound for a long time. Now I'm bearish as you like. And it's happened, it's flipped. And it's all since these interest rate increases have started. Since inflation has been going up so much, since the cost of living has been going up, since oil has been going up. Literally in the last 6 months, the entire world has flipped from coming out of COVID into absolute depression. The markets have now, I think, adjusted to it, and we should start to see some normality return. So I want to ease myself back in, but I still want to be thinking, I'm getting out, jumping ship. Sort of super cautious position trading, if you like. That's the stance. CAD yen and US dollar yen, 135 yen. So CAD yen as well. Canadian dollar has had a bit of a weak, sort of neutrally weak spot. We've had a bit of strength coming through on the yen, which has pushed this down. Be very careful of support on this. We're coming back down into the 24. Again, Friday, dependent on what Kuroda says on Friday. That's going to be key. If we get a good, strong reaction to what Kuroda says, the market goes bullish on what he says on Friday, look out below for everything against the yen, I think. Blimey. So watching these highs. Don't really want to invalidate that level, really. Pound US dollar, you're long on as well, are you? Yeah. Yeah, again, this is I'm totally on board with a long on this. It's just worrying what are they going to do with the US this evening? Be interesting. I should be watching with bated breath. I'm not going to my spin class because normally I have a spin class on a Wednesday at 6:30. I'm not going to that this evening because I've got COVID still, obviously. So this will be one of the first FOMCs I've actually been able to watch for a while. So it'd be good. You also closed the DAX long for 2.46%. Very nice. Yeah, so DAX and indices, as I say, I'm giving up on the indices just for the moment. Saw some news coming in on oil. Yeah, so CAD, yeah. Expecting oil demand to reach 101 million barrels per day. So oil prices, if demand is going up, that normally drives oil prices down. But at the moment, the oil market is shot because the oil producers have completely changed, haven't they? We've lost Russia. So if demand goes up and the cost of transportation and supply is also going up, we're going to see a gradual increase, which will be good for the CAD. Indices wise, as I say, you've got two things in play here. We still haven't got this gap fill done on the DAX, and all of the other indices as well, all the US indices have also got this gap. So from Friday to Monday. So FOMC today, the perfect thing for me this evening from FOMC is a weak US dollar, which will bolster indices to get that gap fill done, and then that opens us up for the US dollar to fly, and next leg down index, which is what I suspect we're going to get over the coming weeks and months. But we shall see. Right, so I'll leave it there today. Be back tomorrow to analyse the fallout of FOMC. I'll be watching FOMC, so I'll be in the Telegram group anyway all day today. As I say, I'm spending all day today doing analysis. Just looking at what I want to do next week. I need to get back into some positions because I've been living off my funded account for the last month, which is great, but and I'm still going to continue to do that, but I need to get back into the old ways as such. So watch this afternoon, 1:30. We've got retail sales. Yesterday we had a dud on PPI. We could well have a dud on retail sales as well, but watch out for that. We've got Lagarde speaking ahead of FOMC. Not quite sure why, but don't think there's anything particularly going to come out of that. Then we've got FOMC. Then tomorrow morning we've got unemployment on the Aussie, so if you're holding any Australasian pairs, any Aussie, any New Zealand, be aware of those. They're going to move overnight. Early morning we've got the SNB press conference, unlikely to have any impact, but worth keeping an eye on just in case. Very early that is, at New York Open. I'll be on for that anyway. And then tomorrow lunchtime we've obviously got the big one for the pound. So just if you've got positions in profit on your US dollars and any index trades, just decide what you want to do with them there. You know, you've got two choices on anything that's running in profit, and I've always done this on my positions. If I've got positions that are round about break even when we get these releases, I tend to just close them because you're either going to get a lovely profit and a target, or you're going to go into massive drawdown. So if you've got stuff in profit, take some, pay yourself. Leave some for a gamble, leave some for a runner. Whichever direction you're in, you know, you got 50-50 shot of getting a runner, haven't you? So leave some for a runner, but be prepared to obviously for whipsaws and stop outs. So just, you know, Play sensible. FOMC will probably be wild. Yeah, I think it will be this evening. I think we're going to have a good one. Because there's a lot of speculation. When there's a load of speculation, there's a load of build-up. But then again, we've had it. It's been total deflation. We've had non-farm payrolls over COVID. Non-farm payroll came out, and it's like, I remember there was one live run we were in, and I said, "Has it come out? The figure's out." Literally, it didn't move. This is non-farm payroll. It did not move. We've had FOMCs where I've been sitting there going, "Have the figures come out?" Because it literally doesn't move. The market pays no attention. So it is hit and miss. Really is hit and miss. Which is why news trading is just suicide if you attempt it, because it's you can't make a consistent living out of it. We're hovering, we're holding here at the minute. So fairly deep pullback hold at the moment. I get the feeling we're going to get a tranche of sellers coming through at the minute. Not seeing a lot of buyers at the moment. Get the odd flick, but doesn't look particularly strong. But who knows? Didn't happen previous. There's a bloody big target there, so this could be it. Even though this is a demo, I'm still going to close this out at break even. Just because that's what I do. I'm not going to break even average on it. Right, I will leave it there, guys. I'll be back tomorrow morning, 7:50. I'll be in the Telegram group if you need me for anything. I'll be beavering away today. I'm doing a lot of analysis. So next week, I'm going to get my account, my position trading account back together, and then we'll start to get into some of the old ways of trading again. ADR, Aussie CAD, Aussie New Zealand as well. Aussie CAD's just hit ADR. Big strong Aussie today. Again, all moving ahead of non-farm. This is all, Australian dollar moving in London. It's not normal. It's all manipulation, trying to get to levels. So I think we've got a big one coming. Should be good. Okay, guys, I'll be in the Telegram group this evening for it anyway. And I will see you tomorrow morning, 7:50. Have a good one.